Hello, everyone. Happy, what is it? Wednesday already. Wednesday morning, halfway through the week. Good morning, Tony. Good morning, Patrick. Give VIX over 15 and see if it comes back down again. Key levels tested, but still so far it's only been a sideways correction. PMG trader, good morning. Good morning, Sterling, testing his new setup with a new computer. What kind of computer or monitor did you get? A motorized standing desk. There you go. Hey, Jake the Snake. Morning, Heinrich. Good morning, Options 22. Good morning, Anissa. Good morning, Richard. Thanks, everybody, for tuning into who's in the background. All right. I guess the big news is the downgrade of U.S. debt. It's not going to make a difference. It's more of a headline thing. Good morning, Andrea. I mean, yeah, it's going to affect the markets minorly, and it could we break some key support and start at least some kind of pullback? Sure, but is it a major, like it's going to have major repercussions through the financial markets? No. Nope. Nope. It's going to be more important. Honestly, it's going to be more important Apple and Amazon earnings tomorrow. Give it a day. Give it tomorrow afternoon with Apple and Amazon earnings, and the debt downgrade will be forgotten. Okay? That's the markets we're in. Hey, Christoph. So let's see. Hey, Jacob. So that's my little take on that. But it caused a pullback. We got a gap down. We got a little pullback, but we've so far held the latest support. All this, by the way, happens after I record the Futures Edge podcast yesterday with Bob and Jim, which will drop early next week. But we looked at stuff on a longer term basis anyways, so it'll end outlining all my key levels. Let's see. Your son built you a gaming PC with more juice than a trader could ever need. Well, then you can go to Steam Deck and play some games when you're done trading. All right, we had the mortgage information out this morning, a little higher than previous, not much. ADP, which I don't know why people even pay attention to it, down from previous but higher than forecast. It's really got very little correlation with the non-farm payrolls, which remember dropped Friday. This is non-farm payroll week. And that's after Amazon and Apple. So that's why the week's backloaded. So far, we got the pullbacks in the mega caps. Pullback pretty, nothing earth-shaking this morning, but a pretty decent pullback. AMD released earnings and bounced up so far, invalidating any more of the double top. NVIDIA, but I'm expecting that to roll over again soon. They had some really wide guidance on that. That's about it. Everything else, I'm going to be watching for a potential these key levels to hold and a bounce going in the open. Com services, consumer cyclical, and technology leading it off. So it's definitely headed into so far going into the open a risk-off morning. Fed watch. Let me refresh this. I did a few minutes ago, but let me see if there's anything changed. The real big thing that I noticed earlier was instead of the first cut in May, it's now in March. So that's really it. Only 17.5% for a hike, so 82.5% for the pause in September. Jackson Hole is much more important in the near term. Finally, out of extreme greed into the upper end of greed. So will this level hold? We shall see. In terms of earnings, there was not much. Generac will bounce back. Today, after the close, we got PayPal, Shopify, and Qualcomm. So there's some stuff that can be minor market effects, especially PayPal and Qualcomm for the chip sector. Tomorrow morning, really nothing besides ConocoPhillips is only the major thing I'm watching. And then tomorrow after the close, again, Apple, Amazon. That's the biggies going into non-farm payroll Friday. Let's take a look. Remember we talked last week. The outside key reversal day from last Thursday, which we bounced back from. retested with those lows, and those lows so far holding. You can see right here with the little spike retest. Back in the 1 hour rotation zone and rotating down. I am watching going around the opening time. If we do retest for that to hold, it could also be potentially setting up a double bottom pattern. If it breaks, the only way I'd look to stay short is if it were to then follow through with a close below it. A close below it. By the way, this is a horribly sloppy. It's not even a valid double top. I was just looking to see where the major targets lined up to, because this can still be used if it does continue and we close below that key level. And I'd actually want to close technically below the rotation zone. These can be used as stop reductions, at least as 45.14. And then the target area also lines up. Remember, it's not a valid double, but it lines up with the breakout zone. And I was just curious to see that. That's why that's on the chart, to somewhat help me gauge. But unless that level decisively breaks with momentum, I'm watching for a bounce off of there. So far, we've come out of the overbought condition, and this would be a sideways correction. Sideways correction. Now, if we do come back down and really start to trigger more of a top, look where the weekly rotation zone is. It's back at that 44.95, 4,500 area. So that's overall my major target on a bigger pullback. That's where it would sit, and that would be the reconnection with the rotation zone. Does it have to stop there? No, but that would be a first level where I will be watching for a major secondary bounce. So primary today, watching to see how we close in relation to last Thursday's low and the rotation zone. We close below there. We'll start watching for the bigger or a minor pullback. If we hold this level or even bounce into the open, we'll be watching to see if we get potentially a double pattern. Otherwise, it's still going to be the minor level on a breakout. If we don't have a double, is going to be about 45.80. Major is still going to be this high, whether we formed a double or not, 45.83. And then I'd be looking to return to about 45.92 and then the gap fill. So that's exactly what I'm looking for there. NASDAQ. Again, on the weekly, you see so far pretty much a sideways correction. NASDAQ weekly getting to the cycle lows, dailies at the cycle, or 1 hour, sorry. 1 hour's at cycle highs, dailies at a higher level. The key area I'm watching is this 15.550 area, which is also where the bottom of the rotation zone is. We start breaking below there. This is where it gets real tight because the last breakout level is really 15.368. So, you know, whether it can turn into even a proper reward to risk with a short, we'll have to see. Because we're going into, if it does come down here, you had this big other sideways base that was formed. We have the daily rising 50. We have a lot of support in here. In order for a lot of technical damage to start happening in the NASDAQ, we have to get below this trend line, below the 50, and below this base formed back in June. Other than that, it would be a standard pullback, and you see here, that would just pull it back into the weekly rotation zone. And the weekly rotation zone, the top of it is about this 15.350, 360 area. So there's not fantastic reward to risk just yet on the downside unless we really get some momentum going. Other than that, keeping an eye on this 15.550, 15.560 area. If we do retest that in the open, to possibly hold and form at least a shorter term base. The Dow, we do have a valid double top in the Dow, not confirmed or triggered. Lower probability variety since it's still against the daily rotation zone, but that's the only thing I'd be watching for, a short in the Dow on the bigger term. You see here that could potentially take it back to the rotation zone on the weekly and the prior breakout area. Same thing. If we do pull back, this 35.360 area is key support. Russell, 1965 is the key support. It would have to get a close below 1960 before I'd really be interested in looking at anything on the short side carrying it. And then the next target area, this is again also type because the next target area is about 1943 to 1930. And the overall weekly rotation zone, even though we're still in consolidation, I'd be looking at that because it lines up nicely with that 1930 area. The VIX, which I saw a couple people talk about, trading above that key level, already pulling back, testing 15 and holding. But if we start dropping back into the below 15, I'll watch for the bottom to hold, whatever short-term bottoms be hold, and then I'll watch for a continued at least partial rally. If we stay above 15 and even start reversing back above 1575, I'll watch for that with those levels. That means either the levels have probably broken or I'll watch for them to break. The DAX, after eking out the new all-time high a couple days ago and then the sharp reversal, what will get me more bearish on the DAX is if we get the close below 15,955. So far, just a pullback between the 50 and the 62.5. So coming up, I will be watching for a secondary reaction in the DAX unless this 15,955 levels holds. The notes, I'm still focused on, unless we trigger any of these reversal patterns, I'm still focused on at least going down to 110.17, then probably going down to 109.27 over the next few days / into next, sometime by the end of next week. The 10-2s, I'm going to be watching to see if this now holds. If it's broken out of the sideways pattern, testing this bottom multiple times. But let's see if it's going to hold above about minus 80 basis points. Also back to the yield on the 10-year. The yield climbing nicely, retesting the highs from the beginning of July and the high area from March. So we do have a little potential double top. Other than that, we really start getting a close above about 4.1. We got 4.2 to 4.29 to 4.32 are the key targets up above. Dollar index continuing to march higher. We also have the first cross the rotation zone now. So as long as we don't get a key close really back below the rotation zone, I'm watching if we did pull back 101.35. But the follow-through closed the upside, and I did raise the harmonics. They were here. Okay? I did raise them now because now the next key level I'm watching on the closing basis is this 102.31. We have a cluster there. The projection harmonic and the key 62.5. Would I be immediately targeting the 87.5? No, I'd be looking at this 75 level because you have this little two tops here, this 102.95, and then the area of the 200 to this 103.59. So those would be the targets I would be looking at. Again, key minor support 101.63, major support 101.32, 101.35 area. Crude, any pullback, watching for a pullback into the rotation zone, and a little minor support level is 79.70 to 80. So that's where it's just getting a little toppy right here. So at least I'm watching for some kind of pullback against a very key area, very key resistance zone somewhere up here. And before it breaks out, we did talk about this on the podcast, so you'll get to hear my full thoughts when that drops. But I think we'll get some kind of at least pullback and resetting to make another push higher if that's going to break out. Gold. Nothing, still watching for the rollover. Still watching for the rollover gap fill eventually. That's where we sit there. 10 years on. Keep paying attention to this. This is more important. This is much more important than the debt downgrade. What's going on with the 10-year in Japan? Because this could trigger at some point a major unwinding if they don't start stepping in. It's going to be interesting. Now this is up to 62.6 basis, 62. I mean, we're sitting there breaking out. This is the highest level since back in 14. So this is pretty key. I forgot to look at something here. I forgot to look at that. Oh, what? Oh, I got to reset that. Shoot. Weekly. Look at that. It finally completed. I just wanted to see if that had completed yet, and it finally completed. Wow. So that is very interesting. Should this continue to march higher, even on a pullback, this could lead to some unwinding of the carry trade and have much more market implications. Moving forward, the yen, slight little pause here. Yeah, this is in double top territory even with this hitch. So the only thing that could tip me bearish is on a close below that 137.23 area. Euro looks, we do have a potential double bottom, but I'm watching for a follow through to the downside. First is 108.81. And then from the last major move up, which if you could come off here, close below 107.80. I'd continue to watch for a pullback there. This is a very key area because it's a little minor support. Pulled back into this key support area, but it's still holding minor support. But if that breaks there, I'm watching for the easily retest of the 200 area and that 62.5. Pound will continue to push lower. Still looking for 126.60 roughly, and then, oops, I don't want that one. And then the further continued pullback, 126.21. If we close below that, I'm then expecting us to retest that 200 area. So, Fitch ratings have all the power to affect the market. It's not going to affect the market that much. It's more psychological than anything. Okay? It still hasn't taken it out of the safe territory yet. It doesn't have any ramifications to the holders of U.S. Treasuries because it's still in that AA minus rating, which doesn't change anything you have to do for hedging or different rules for if you're banks or institutions that are holding those. It doesn't have much to do for pensions that are holding them yet. Now, if it started to get downgraded into out of the A ratings into the Bs, that would be major because that would have major market implications then. But it's a rating agency, and rating agencies are notoriously behind. It's like they're announcing that the barn's on fire after all the animals have run out. What else do we sit with? Keep an eye also on that dollar index. Spiders, again, the key level on that is 451.55. Trading 453.50. I'd just be using these harmonics if we do hold this low, unless you get a bottoming pattern. I'd just be using the key. It's down trading at the 25% harmonic. That's 453.50. Rally 454.50, 455.50, 456.50 roughly are the targets, and that would be for the gap fill. The key thing, the two support levels, 452.50, it's just the way the numbers are coming out. There's nothing magic about the 50s. Then the low from last Thursday, 451.55. For me to look to anything to remain short, we'd have to get the close below the rotation zone, though, coming in at roughly 450. A lot of 50s there. So maybe we should have like a 50 cent playing in the background. Where are we sitting? 379.36 on the Qs. 379.60 first level of resistance. Then I'd be going to about 380.70. Then we'd be looking for upwards to the 382.80 to the gap fill again. Major support, I'm watching 375.90 to 376. That would also, on a closing basis, I'd need a close below the closing price of Friday of the 21st. 375.63 would be my closing price to start watching for carrying shorts forward because there's gap fills down here. But I need because it would have to set a new low close. And the lowest close on this pullback was from Friday, July 21st. And that would also be below the rotation zone. So that's the level I'll be watching on a pullback. Tesla, again, we break below this 255 area. I'm watching for a return to 87.5 harmonic and the 50. Below that, 240.70. You start getting a close below there, then we could easily start backfilling, and that would probably mean we're going to be on a bigger topping pattern on the market because I'd be watching for a return to the 200. I saw your comment. We'll look at MU, Micron, NVIDIA. Just a slight pullback. I'm watching in relation to the rotation zone, which is not closed below since its breakout. So you had went to consolidation, broke out, and you see there's been no closes below the rotation zone. So that's what I'm watching with a pattern shift there. What did you have? MU has a triggered monthly double top. This is the one that Sterling is referring to. There's your triggered monthly double top. And it did hit the first target, and I'd be watching for another rollover play. The longer term this could hit. Now, again, these are the monthly patterns. It can take many months to unfold. But if you start getting patterns back on a weekly breakdown, especially start breaking down below about the 60.85 area again, 60.80, you have targets to the downside. On that, is this setting up a potential weekly double top? This, let me look at that. Hold on. Let me look at this. Is it valid? I'm sure you've measured it out. That's valid. Yeah, I mean, that's to retest the low area. It's a little choppy going into, I don't like it as much going into this, but it's complete. It's the same breakdown point. It's roughly if this 60-50 area, 60 this does trigger, yeah, I'd definitely be looking at a retest as low areas, and you can use these as lowering stops or for setting up put spreads or something. But I'd definitely be looking for a retest of that 50 area, and then on a break of that, it could get interesting because that also, look at where that is on the daily. That's the 200 area again. So if this triggers and it breaks the 200, that's also a negative sign. So that's definitely a potential short candidate if we get a bigger rollover in the markets and semis start getting some weakening. Thanks for pointing that out, Sterling. All right, with that, I shall talk to everyone later. Hope everyone has a wonderful trading day. Just glancing at the S&P going into the open. So I'm still watching if we retest this areas for these lows to hold unless we start getting really negative market internals, and that we already covered the VIX, and when VIX starts popping again. With that, I shall talk to everyone later. Bye for now.